First thing first, of course, this is moving here. Fair enough. But this is not where the trade is, as per usual. This charts, ES or SPX or any ticker that you pick, these charts are just for us to pick a number or a strike, to bet on. Now the trade is actually going on here, right? This is where it bounced and it is coming back down after the data, and we would want to see it continue probably down here. And let's see, this chart looks like it is getting exhausted, so we might get a bounce, but let's see where is the bounce coming from. If it breaches here, then the downside is still 105.12. Let's come back to this chart, DXY here. Right. Yesterday, if I recall, uh, we were saying that it is violating the second standard deviation, and also on the weekly chart, it was hitting those upper limits, and it did come back down, and we wanted it to come back down. And yesterday, I was expecting to see this number get tested, the 100 moving average. Today, obviously, it is testing that and bouncing from there. No surprises. Now, if it breaches here, which is about 105, right about here, 105.20, whatever this number is, 22, it's bouncing there. So if it comes down there, let's say it breaches that number and tests up 5 at about 105.18, then that breaches the one standard deviation, should get another bounce, 105.12. That breaches another bounce at about 105.05 area, right? So let's say if DXY takes this path to the downside, obviously you'll have some more momentum to the upside in SPX, and we'll get into Apple in a bit. But yeah, that's where the whole momentum is coming from. So if DXY takes this path to the downside, and also I am closely monitoring right here the MACD on the Fibonacci, and this one as well. So let's say if today pushes it down, then very likely this downtrend will continue at least till FOMC, right? Uh, that would mean that probably the markets would either stabilize around here, or stay buoyant, or perhaps move to the upside. And we'll look at Apple and Microsoft in a minute. If both of them are still projecting upside, then likely the market will move upside. But for now, if in general the theory is that if DXY takes this path down to 5, one standard deviation, and the 8 till 105, then very likely you will see SPX move to the upside, right? And here was the idea for the breather. It hit that, and we were expecting a breather here, or if that breaches, then very likely a breather right about here, which wasn't much from this number, 103.85 to 106, sorry, 105.85 to 106.15, which wasn't much. It was okay to take a educated assumption here that it would take a breather. Now the breather is happening. How deep of a breather? That 105 should act as pretty decent support, and if that breaches, you're expecting it to come back into the mean and 21, and looking for a bounce just about at 104.94 area, 104.94, 104.95. So between, let's say, 104.90 to 105, I think we are looking for a bounce. Even if it comes down there, it's not going to happen in a straight line. We've seen that 5, one standard deviation, and then the 8. So it's going to take that path. If it does take that path, then very likely you'll see the market move to the upside. Exactly, that's what is happening right now. Right, let's get into here. Right, so my understanding was right here, you see these 200 moving average and the 50 moving average, right, on the hour. If it clears here, my understanding was that it's going to go hit this number about 402. That's exactly what happened. The other trade, not the other trade, but the reason that it would move up was coming from this chart. Where is that chart? Right here. Right here, this chart. So the idea was for Apple to bounce here if the data was to be in favor, or rather the data was to show that the claims have increased. Then the idea was for Apple to bounce here, right? How far of a bounce? Very likely it would have bounced till here, and that's exactly what happened. Now it's taking a breather. Let it take a breather, and now yesterday the conditions were these, and these work in cycles, right? These work in cycles. These are normal market moves, and I've seen on Twitter and stuff like that People are saying these markets suck, yada yada yada. Those people have not been around, I guess. I think they've been, into that bull market for the pandemic bull market, and but these are normal circumstance, right? You get oversold, you get overbought, you get oversold, you get overbought. Pretty simple, pretty easy to trade. This was a bit excess, I think, this rally all the way from here to here, and that's what corrected here, right? So this would make sense because we were expecting it to take a breather somewhere about here, right? The 200 moving average, right about here. We were expecting it to take a breather, and it did not, and it moved higher. And after that, it came back down. That's fine. And today, again, if the 1 hour gets overextended, very likely we will see it pull back down. I'm thinking the pullback should, um, you know, 5-8. This is normal, right? If the pullback happens, here on this chart, it is showing up as overbought, where on this chart it's not. So the average, which is a Heikan-Ashi, is showing up as overbought, but the regular candles, it's not. So got to be a little bit cautious here. And if it starts to push to the downside, then you have this line right here. If I extend this line here, it's getting at about 153.43. That breaches, we're expecting it to come back down into 5, then 8, then this line here. 150 to 88. If that line breaches, you can expect a fight from here to here. The mean right now, the mean on the hour, and the 50 on the hour is about at the same spot. But if that breaches, then we are likely to test yesterday's lows about 150, 180 area. And today, again, doesn't matter. Let's say if the sell-off happens today, right? If the sell-off happens and then it starts to come back down, not expecting Apple to breach below this 150.30 area. And if Apple comes back down into this area about 150.30, very likely I'll look for another bounce, just like the one that we had yesterday, or yeah, yesterday, day before yesterday, from that 151. 20 somewhere about there. So expecting the same thing if it comes back down, especially if it breaches the 50 moving average right here. As of now, it's standing about 150 to 50. If that breaches, then we'll start to reassess the downside, 150, 180, then about 150, 111, then about 150, 40. Not again, not really expecting it to come back down here. And if it does, I'll be looking for a bounce, and really not really not realistic, but let's keep an open mind. Uh, and if it does come down here, then I'll be looking for another bounce, not just in Apple, but in the markets overall. And by the time it pushes down, let's say if it does push down to 150, 30, 150, 40, then very likely you'll have the market breach the mean. Let's go to that area, this right here. And very likely this will be broken, this will be breached to the downside. On ES, that's about 39.86. I think that's even lower on SPX actually. Let's get into SPX. Yesterday we got a bounce right about here, and this bounce was okay. And today, I think if it comes back down, this is still defined to the downside. If it comes back down, the path it's going to take it is going to, if it breaches here, then it's going to come back down here. Look for a bounce at about 39.84 area. That breaches, then come back down into 39.72, 39.70 area. If that breaches, then likely it's going to move down into this mean 39.61, 39.62 area, and we'll look for another bounce. And if this mean breaches, then we are looking for a further downside about 39.26. I don't think this is the case for today. And today I'll be looking for probably if it breaches about 39.85 area, then I'll be looking for a retest of the mean. If the mean breaches today, and very likely this mean will get tested. Uh, as of now, not really plotting anything sub the mean on the week for SPX. That's Heikan-Ashi mean. And I think the Heikan-Ashi mean will move up a little bit, 39.65 area, I think. So all in all, I think that should act as decent resistance, as decent support. But if it does breach there, then let's start to reassess for the downside, for the thesis. Maybe not a story for today, but probably this is where I think it is headed, 39.26 area. And that would actually make sense for it to come back down into that number. If it breaches here, we are expecting it to move into this number, right? Now, another thing that that I would bring to your attention is the daily chart on ES. This is what is happening with the daily chart on ES. Right? That doesn't mean that it's going to bounce right away, but these oversold conditions are starting to set in. What would that mean? What would that mean if, let's say, this thing comes back down, right? It bounced yesterday here around rather today around the one standard deviation, rather two standard, no, one standard deviation, right? 3983 something. So if it breaches there, expecting it to move down into 3955 area, if that breaches down, 3948. Again, this will act as a decent support. We'll look for a bounce. Why? By the time this will actually get oversold, and you will also start to see MFI getting oversold here on the regular candles if it does come back down into the 200 moving average. Why would it come down into 200 moving average? If Apple starts to push to the downside, then very likely you will have another 1% move, 1 to 1.5% move on SPX. Not really expecting. Yesterday, as I was saying, that even if the market moves 1% yesterday, even if the market did move 1% yesterday, I wasn't looking for it to close at 1%. I was looking for it to close sub 5%, right, 0.5%, and that's exactly how it panned out. Same thing today. If market moves down or even up, let's say 1% or even 1.5%, I think it will not close at those levels. I think it will come back down to settle within somewhere between 0.5 to 0.6%. Why am I saying that? Because the US 10 and the DXY are still not, those two are still unclear as to what direction they would want to take. Why am I looking for a downside is because if you look at the 6 month yield and 1 year yield and the 9 month yield, and the short term, basically the short term of the short handle of the curve, if you're looking at those, and let's say if I have $1 billion to invest, right? Or rather, if I have $1 billion in the stock market, what would I do? I would dump. I would dump, and at least half of it I would, exit from the stock market, and I would move into treasuries. That's what I would do. That might cause a bit of selling pressure on the equities, right? And if the equities sell off, obviously you'll have some more downside on SPX. So that's the idea there. But what are the equities? Let's say if I'm a institution with $1 billion and I have invested $1 billion in the market, what equities would I dump? Right? What equities would I dump? Probably the ones that are high flying. If I have a position in, let's say, Apple or Nvidia or Microsoft, probably, or Tesla, probably those are the ones I would, probably get rid of. And probably if they come back down, I'll pick them up again. That's the idea. Because other, let's say, other 490 or 450 companies on the S&P, those are anyways down, right? People who wanted to sell very likely have sold out of those. So who's remaining? Basically, that now that you're, the difference between the 395 PE, 495 PE on SPX and the 5 S&P S&P 5 PE, there's a huge difference in that. So very likely the ones that should come out is from that 5 S&P 5. The PE should come down from that. And Apple, I think Apple. I don't know who's buying, but there is a lot of buying going on in Apple. I don't know why. Maybe it's rotating or not rotating, but because I think Apple is trying to move or rather decouple from China. China operations, not operations. What would I say? Manufacturing, right? And they're trying to diversify their manufacturing into India and other countries. I think that's another good thing about Apple that's happening right now. Besides their a huge cash chest right now. So that's what is happening there. So keep an eye on that trade. Right. So what? And here is the downside trade about 39.56. This is still defined. That breaches, then we'll start to look for that 39.50. But as of now, this is not the idea. If it comes down to, let's say, 39.56, that would be a percent from where it closed yesterday, right? So still nothing crazy. Even if it comes down to here, this is nothing crazy. This is still within the within that 1%. Now to the upside, let's say Apple starts to move to the upside. Let's go look at Apple. Apple is hitting this number right here, right? The one standard deviation on the day. That's been acting as decent resistance for the past couple of days. One, and it was acting as decent support here. Now it's acting as decent resistance. And let's say it breaches that, and MACD crosses to the upside, then very likely you'll have again a run up for this number here, about 156 area, right? And it has failed there multiple times. Very, very likely if it comes back there again, uh, the chances of Apple clearing this number and pushing into the second standard deviation on the week are rising now, right? It has tested that, failed it, came back down, hit the mean, and bounced. Now, if it goes up again this time, very, very, very likely, my thinking is that it will breach this barrier and start to move up, probably into 161. And there is, good enough case for that. If it's good enough for the way I think I think investors are thinking is that if it's good enough for Warren Buffett, and it's good enough for us. So that's I think that's some mindset there. And it would also make sense for it to come back up into that second standard deviation on the week, and probably after that we'll start to see another breather. But that's the idea to the upside, and the downside is still about 150. If that breaches, we'll start to see some further downside about 149.50 area. Cool thing. Yeah, so this is the immediate trade on Apple. If it clears, then we'll start to look up, probably 154 area. And if it starts to move down, then you're looking at the 5, 8, and then probably here at about 152.50 area. Cool. Now let's get into, we discussed DXY, right? Yeah. Let's see what is the trade on Microsoft. This thing is trying to bounce here, and it is oversold on the lower time frame. Same trade, similar, right? uh, Oversold conditions coming back down, bounce up to the 5. This is the minimum. That clears, then you can look for an 8. If that clears, the baseline is sitting up here, 105.47 area. And if it, let's say if it bounces here, then you'll start to see some weakness come through in SPX and the other tickers. Let's see Microsoft. Come on. Right. So overbought, oversold conditions, bouncing, fair enough. It'll do its thing, and this is where we were looking for a bounce yesterday. The wick came down, but by and large, this held, and the bounce was supposed to last into this. If that clears, very likely we're going to see it all the way up here. Right about 255.87, that clears. 256.47, 256.40 area. It this if Microsoft reaches all the way up here at the 200 moving average on the hour, very likely it's going to take a breather here. I think it's going to take a breather right about here at the second standard deviation. That clears right here at the super trend. That clears right about here at 256.47 area. Right, so we will keep looking for those breathers, and as and when these gets hit, we'll exit our trade, and then if it clears, then we'll go again for the same trade. And if let's say if it starts to come back down, new R has yeah, it's detached from its 5. So here, from here, it made sense for it to come back down here into 50 moving average and bounce. Again, if it comes back down here, very likely it will breach it to the downside and test the 5. Unless the 5 moves up and starts to reattach itself close to this number, right? And that's the downside trade, right about 254.35, and to the upside, very likely to 55.90. That's the immediate trade. And if it starts to come back down, we know the drill, 5, 8, the mean breaches, very likely it'll come back down here again into this 100 moving average. Let's go here. Come on, all right. This thing right about here, it still crossed to the downside, but it did not breach the zero line here. Ideally, I would have wanted to, breach the zero line and then start to move to the downside. At least, at least a couple of days price action to the downside. That would be really nice, right? So let's say if it starts to bounce here, it will go for the mean reversion. Mean is sitting at about on the day it's about 257.50 area as of now. That those things might change, as and when the data gets populated. But as of now, the mean is sitting at about 257.50 area. I think that's where Microsoft is starting to move, and let's see how that works out. But by and large, looks like that's where it is heading. And to the downside, right about here, the inner lower Bollinger Band at 254.60, that breaches right about here. This number should act as pretty decent resistance, about 254. There's a 21, and very likely 5 and 8 should act as a pretty decent support here to the downside. If it breaches there, then expect it to come back into this number, 250, 260, then very likely come back into this number, 250, 90, 251 area. Right, yeah. So, and let's say Apple starts to move to the downside, violently to the downside, very likely Microsoft will follow about 247.80 area, the 50, basically the 50 moving average on the hour. And if it does breach here, then I think by the time it comes down here into the 50, I think enough damage would have been done on the SPX side of things. I think if it does come back down into 247 alongside Apple, then I think SPX would have been hitting that 1% on the day easily. Yeah, but let's say if Microsoft comes down, but Apple stays up, like like yesterday that was happening, then very likely it will not. Again, SPX will not have a 1%. Probably be about again zero point 0.6 to 0.5%. If let's say Microsoft starts to come back down here into the 50 alongside Apple, then very likely we'll see 1% day on, easily 1% day on SPX. Right. Let's also look at this chart. This chart is still inconclusive. Why am I saying that? Because this thing is moving up and this thing is moving down. And for this chart right here, this will still remain the resistance at about 256.90, 257 to the upside. And if Apple bounces, then very likely this is where Microsoft will hit and will start to take a breather again. Come back down, the 5 to the downside, that breaches the 8 to the downside. And if selling starts to accelerate, very likely it'll come back down here into 21. We'll look for a bounce here. Uh, but if that breaches, let's say for some reason Apple breaches, Microsoft breaches below this inner lower Bollinger Band here, very likely it's going to go for the mean. Maybe not a story for today, but this is where it is headed, about 245 area for Microsoft. Let's get into Tesla. Tesla, this was an easy call from yesterday. Why? Simple. It was coming down. This was coming down. And where is that thing? We have still, this thing to the downside. So this was an easier call, the mean reversion. And yesterday the mean was sitting at about 175, and today morning it came back down to 175 and bounced off of that mean. Very likely during the session, there's a bright chance it will come back down into this number and perhaps test this number about 172.60 or something like that. But let's say if the market starts to move to the upside, and Apple doesn't give any room to the downside, very likely you'll see this thing test 184.30 area, basically the 8, and then very likely it will come back up here into 187. And I'm not plotting anything above 188.80. Basically, the 50 moving average. No, not the 50. 5. Right, the 5 and the 21 are sitting at exact same spot, about 189 area. So not plotting anything above that 189 area. Very likely if it comes back up here, I will short it again. Right, let's go here on this chart. This thing is still crossed to the downside. So if Apple starts to move to the downside, very likely you'll see a test of 177 and then very likely a test of this 175. I'll look for another bounce here, but if that breaches today, look for a push all the way into 169. I think 169 is a bit excessive for the day. But let's say what happens. Let's see how it works out here at 177 to the downside, right? And it did come back here pre-market. It is bouncing there. Fair enough. Let it do its thing. And from this low, it hit this number here. That cleared. It is going for the next, is sitting at about that next level here. And if that clears, the next is 184.70. And if that clears, the 5 is sitting all the way up at 189. So not plotting anything above 189 as of now. I'm thinking that when the market opens, the data will populate and this thing will start to come back down. Very likely the 5 will be about 18750. So bright chances of that happening, especially if Apple bounces, right? The trigger RSI is all the way down here, so it might give us, it might trigger that upside. The Williams R is out down here, so that might also trigger an upside bounce. Let's go here. Got 3 minutes. Right, so this is where 175, whatever this number is, that is bouncing, oversold conditions, and we look for these oversold conditions all the time, and it hits a major support area and it bounces, right? So how far of a bounce? Technicals, 5, 8. That clears, very likely it's going to go hit this number, about 182, 183, and the mean is sitting just about there, 183 to 183.50. That's where the mean is sitting right now. And if that clears, we look for next. If that clears, we look for next. And the trigger RSI here triggered. So this was an easy trade if anybody took it. Yeah, this is, and to the downside, let's say if it comes back down, it breaches. I don't think it's going to go breach that 175 area, but let's say if it does breach there, then very likely it's going to come back down here into this number, 200 moving average, about 172, 173 right now, right? So that's the idea there. Uh, let's look at this. Where is that? This chart. So you see this thing here? This thing is, it's not just me who is, who's wondering about this technical MACD to why is it crossing the downside? Given that everybody is talking about higher rates going higher and staying higher for longer, and then why is this thing crossing to the downside? I have no idea, and I think this is the smartest money out there. The 10-year is the smartest money out there, and this technical is telling you that it's going to move lower. How much of a downside? I don't know. At least the mean should get tested about 3.9. Even if it comes down into 3.86, yeah, that sounds okay. But why is it doing, FOMC is about what, 10, 12 days away, and this thing should not be doing this. But it is what it is, and will go according to, how it's going to play out. So I think if it starts to come back down, it will pull the DXY with it, and then very likely we'll see some upside in the market. But be very cautious. I think this is a false positive. I think the rates are still going higher, but I don't know if if US 10 will follow to the upside or not. But rates pretty much are guaranteed to go up. The Fed funds rate is guaranteed to hit 5.5. And on that note, we still got just 1 minute. Let's go into live trading.